Alrighty. Okay. So this is a webinar for managing threatened trades. Okay. And so if you are a trader, a SPX or credit spread trader, you know that you manage threatened trades, right? One way or the other. So, but I put on a process that really it works much better than taking max losses. And so today we're gonna go through that, and hopefully you'll get a lot of value and for doing this. And I've done this. I've been doing credit spreads probably 15 years, and with the trade alert service, and and I can tell you that don't give up. Work hard, and you'll see those profits come in. All right. Okay, so let's get started here. So what can you expect? So I'm going to show you how you can make consistent returns monthly based on margin capital at risk by adjusting trades without taking large losses, and make profitable returns month over month. Okay, and this is doable, guys. Okay, it is doable, right? All right, so what are we going to learn here? How we went from taking 0 DTE, 3X losses to a few losses in every month. Okay, and we'll share those secrets to you. All right, and how to identify the strikes and strike prices you'll use to increase your chances of profitability. How best to mitigate a trade that is threatened, capital requirements to manage in the money, out of the money credit spreads, and the best time to widen spreads to gain an edge on a position. Okay, so we're going to go through all of those things, right? So first, stay with us till the end. We have a special bonus for you, okay? And I promise you that I will answer all your questions at the end. All right, so write it out, and I will definitely answer any of your questions that you have. All right. Okay. So why are you here? Okay. So first, are you interested in learning new strategies that'll take your trading performance to the next level? So you'll finally leave that 9-to-5 career behind, or you've seen, heard about, read about others making money trading, and you know that you can do it too, but you're just not seeing your account grow. And number 3 is you've tried different trading strategies, and you thought, okay, this is it, this is the one, and then you discover it's just not getting you to the place of consistent results. Okay, so let's talk about the 3, and let me know what you guys are close to. Number 1, interested in learning new strategies. Number 2, desire to see your account grow month after month. And 3, find the right strategy that provides consistent results. 3. Okay, awesome. 1, 2, 3. Yep. 2 and 3. Greg, John, great. Correct. Awesome. Okay, good. Good. You guys here are alive and clicking. All right. Okay, so let's get started here. So I'm a regular guy. It's my family on the left and my parents on the right. It was an MBA program a long time ago, and that career left, and I ran into options trading, which I really love. Okay, all right. So with that, let's talk about the state of mind. Okay, so imagine how you would feel like most of your trades were winners month after month, and it would be confirmed by watching the size of your account grow, and also becoming the trader that no longer takes large losses but consistently trades according to a proven trade plan. And that's really important, guys. That is profitable over time, allowing you to grow your account month over month. Okay. So the state of mind as a trader is really important. Okay. And so we're going to talk, more about that. So let's talk first about the nuts and bolts of a credit spread. Okay. So first of all, a credit spread is a combination of 2 puts and 2 calls, where a put or call that is sold is more expensive than the put or call that is bought. And that's why you get a credit when you put on this trade, and it's a negative, right? Also, it's also the max gain that you'll get when you put on that trade. So if you look at this pull spread, you can see a sell, one contract, 40-50, 40-40, and that's a 10 wide position. And this is a put, that's the type. And you get 50 cents, you multiply that by 100, and your trade right there is $50, okay? So I trade 0 DTE all the time, and I always use 50 to 70 cents, and it works, okay? All right, so at this point here, you're selling the 40-50 and buying the 40-40 put, okay? And then the trade is considered to be a high probability trade. However, there are risks, okay? And we're gonna talk about that. So here's that trade, okay? The risk reward on this is $1,000 minus 50, okay? So that's basically a horrible risk stature for trading, okay? But the high probability, helps you tremendously as well, okay? So the max loss here, which is almost the margin requirement, and you subtract $50, that's basically what you end up with with a max loss, okay, with one contract. SPX can trade between 5 points, okay, so that way you can go down to $500, and that's your basically your minimum to place a trade for SPX, okay. Alrighty. SPX rate of decay. This is one of the greatest things that happen because it's helping you make your trade come true. Excuse me. So let's go through the decay process in this trade. Okay. So from 68 days to 33 days, the rate of decay is 34%. The rate of decay is 57% from 33 days to 5. And from 5 days to expiration, the rate of decay is 100%. Okay. So getting closer and closer and closer to expiration is it's great because it decays very, very, very quickly. Okay. All right. The profitability factors on this are 3. So basically, number 1 is implied volatility. So when you place a trade, I like to place a trade when there's generally higher probability. I'm sorry, higher what do you call it? Volatility. Sorry, higher volatility, and then close the trade when volatility is lower. Okay, so that's what I try to do, but it always doesn't happen that way. So, and I also like to put on put spreads first after and then I put on a call spread, and the reason I do that is because the market is generally moving higher most of the time, and it's just it's just an easier way to trade when you're more out of the money than in the money, obviously. Okay, all right. So now another factor is theta. Theta, which is what we just talked about, which means that it measures the rate of decay, the rate of decline in the value of the option through time. Okay, and then number 3 is market direction. And if you're trading here. So if you put on a put spread, you want the market to go up. And if you're putting on a call spread, you want the market to go down, okay? So you want to be in a position here so that, the market is working in your favor all the time, okay? All right, so let's talk about this nasty thing called pattern day trading. All right, so this is something that you need to be careful with because it could restrict you for the worst thing that could happen is that you'll get restricted for 90 days and not be able to trade. Okay, and at that point, you need to go to another broker or do something else to get back in. Okay, so you don't want to get into that position. So the process is that you can't basically it's the buying and the selling and selling of buying and buying when you get a position that's a day trade. Okay, that's basically considered as a day trade. And so what happens if you put on more than three trades a week or a 5-day period, and then you put on a fourth one, basically you can get restricted if your account is lower than 25,000. Okay. And so those are things to look at. There's other ways you can get around it. Okay. But this is basically how you do it. Okay. So to avoid getting, and obviously if you have an account that's over 25,000, you don't have to worry about it at all. Right. So you want to limit trades to one trade every 3 days per week. Okay. That gives you that process so that you can actually day trade. Manage trades from multiple accounts. That's another way to do it. Trade wider iron condors so that you're further away from the money. And then you can also actually use ES future spreads, basically, or trade options on futures, basically. And there's no restriction on that at all. And you can trade that all, in and out every day. A little bit more commission. However, there's benefits in doing this as well. Okay. So if you don't have a $25,000 account, options on futures are really great to use in that instance. All right. Okay. So let's talk about managing threatened trades. And we're going to talk about out of the money, in the money, same strikes, lower strikes, widened spreads. Okay, and so we're going to talk about all those topics in this process. Okay, all right. So let's see here. So when I put on a trade, I this is for 0 DTE, and actually I put on trades. When the market opens, even if it's like a 7 DTE trade, just because at that particular point, typically the market is at the highest volatile rate place, and when you're putting on that trade. So I love to put on, first of all, I love to put on trades the first 1 or 2 minutes of the trading day. And even if I'm going to trade a monthly or a 7 DTE trade, I like to put those on as well, just because volatility is higher normally. Okay, not all the time, but normally that's how it is. So when I put on the trade, I'm using 5 to 30 wide spread. Okay, the way that I like it is 10. That's just the way they do it. But I know that other traders use different ways, and there's benefits to to this, but I've figured out that it's just a sweet spot for me. Okay, so wider spreads provide greater distance to the market, and we'll talk about that a lot. And the price also requires additional margin when you do that. Premium should be between 45 and 90. I typically take 50 to 70. And that seems to work, especially for 0 DTE. Take profit, 10 cents for each spread. What I've been doing lately now is for guys that have that don't have $25,000, what I do is I'll put on my trades, let's say five contracts, and then I will close 4 of those, either 10 cents or 5 cents. Okay. And that basically reduces risk during that process. And also I'm in the game and helping others, if the trade is threatened during that time, I'm in there and helping guys adjust those trades to make sure that you don't get huge losses. All right. All right, closing the short strike. That's just one way to do it. However, that doesn't negate the fact that you are still in a day trade. Okay, but a lot of guys do that, just to make sure that the risk is completely gone. Okay, expiration is another way to close it, and I really do use for zero DTE. I really do use zero DTE. I'm sorry, I close those trades at when they're exercised, basically when they're gone, and it works. It just works really well. Okay, all right. So when you're trading, the typical way to stop, to use a stop loss is basically 2x or 3x. However, what I do is I always roll zero. I always roll put spreads, and then I always not always. I always manage the call spreads, just because most of the time the probability is that you're gonna close it out by expiring. Okay, and I've seen this over and over again, where you go to 3x and then the market goes down or up, whatever, and then you basically lost the you basically lost the position at that point. So I don't like doing that, just because for me it's a lot easier to manage a trade after it's threatened. Okay, and it just works really well for me. Okay, so let's see. Rolling trades near the money is good. Rolling trades in the money are not that good. All right, and we'll talk about that. Okay, so I really put a lot of research into this process, and you can see here that this is a 0 DTE 22 VIX at this time, and the green basically are the call spreads, and the puts are the put spreads, in the red. And this position here is a 5 wide. This one is a 10 wide, and this is a 15 wide. Okay, and so now when you look at this, first of all, when you're trading five wides, it's just really easy to roll that trade, and you get a lot of distance from it. Okay, and that's one of the benefits of a 5 wide. With the 10 wide, you can see here there's a lot more width in that or that range, so that you can really put on a trade and just let it go, basically. Okay, and then when you get up to the 15 wide, it's really it's a thing that it just doesn't. It's not what do you call it? It's not worth it. Okay, that's what I mean. It's not worth to have that little bit more of a range than you do. Okay, and then when you go to the 20 and further out than that, I've known a lot of traders that have done that, and it's just you stop out anyway, for that, and so it just doesn't make sense. Okay, so here you can see that this is the this one down here is 27 now VIX, right? And you can see it's quite a bit greater, but it's a diminishing return, right? So when you get to after you get 10, basically it is really a process that it's just not worth it. Okay, and that's really what I've found out through the years here. Okay. All right, and then here is a 1 DTE. Now, did you see the chart? Okay, let's go back. A 0 DTE has more basically one DTE that's 27 is less than basically zero DTE. Okay, so zero DTE actually has more, more volatility than a one DTE trade. Okay, believe it or not. So one DTE is not, if you think it's good, it's really not. Okay, so I like to stick to zero DTE because it's just the sweet spot for that. And my P&L tells you that as well. Okay. All right. So let's go through the actual types of trades that we're gonna go through here. Okay. All right. So and these are trades that I pulled out of the market during periods of time so that you guys can see how this works. Okay. So now in this case here, your the market price, and this was a while back, okay, but it doesn't matter whether it's near or far, okay. The market works the same way all the time, and I've been doing this for 15 years, 20 years, and it hasn't changed so far. Okay, all right. So in this case here, we're looking at a 10 wide, and yes, it's actually threatened. Okay, it's now 245 because normally I would put on a 50 cent position, and now this thing has gone to 245. Okay, and it's very, very close to the market. So when you roll it, you'll roll it just clear, right? You'll get a for the next day, basically. Okay, so you roll this for the next day, you get $1.75 for that roll, right? And you have the same strikes on this trade, okay? And that's what you get. So you get a $1.75 credit for this position when you roll it to the next day. Now let's go for a position that's rolled down. Okay, so and this is what I like to do. So if it's getting really threatened, the best time to do it is when it's out of the money, probably 5 to 10 cents out of the money, and roll it down. And so you can see here that it went from 35.50 to 35.40 instead of 75 to 65. See, and then you still get a credit of 35 cents. So here you roll down 25 points and it's a 35 cent credit. Pretty sweet, right? Okay. So now let's roll down and widen the spread, which is really cool. So now you widen the spread. So instead of 10 wide, you're getting a 15 wide position, right? And I wanted to make sure that we're doing a credit here on these times because everybody likes credits, right? Everybody loves credits instead of debits, okay? But there is a place for debits, right? And I'm going to talk about that a little bit more. And I don't have a lot of information for that, but I'm going to talk about my own trades that I've done for several years and what happens to those trades, okay? So it's good, bad, and ugly. All right. So this is a nice position moving it down, right? Depending again on the volatility. So here you roll down 45 points and you got a 15 cent credit by widening that spread. Now remember, when you widen that spread, you are really sucking margin in, okay, to do it. And if you do this over and over again, which I've done before, you can get into a lot of trouble, okay? So you need to have a lot of money in order to continue widening spreads, and I've done this before. And so just to let you know, I don't really do it anymore just because I'm able to manage those trades by using counter trades and allowing me to eventually get out of that position, right? And it's usually profitable, okay? And just to let you guys know too, is that in our newsletter now, okay, we share our P&L, and you can look at it every single day, okay. And so it's on rhythm now, and we finally got the P&L working, and so you're able to go in there and look at the positions in there, okay. All right, so here now we rolled, so we're going out with the same strikes 2 days out instead of 1 day out, okay. Oh, sorry about that. Okay, so anyway, we do that, and then what happens here? So when it goes 2 days out, and these are the same strikes, you're getting a 215 credit on it. Okay. So so rolling 2 days out instead of 1 gives you a 40-cent higher credit than you would for 1 day out. Okay, now widened and 2 days out. Now it's really far. Okay. So here you rolling down 2 days, and you widen and widened and it gives you 60 points for 35 cents. Let's see, roll down. Okay, so now we rolled it down, and we got a 15-cent credit, and this is spread. Okay, we got it. And now this gives you 100 points down, right? When you widen that spread 2 days out. So that gives you a lot of distance, right? So if you have enough capital, you can really get away from the market and come out profitable. Okay. All right. So here now we go same strikes next day in the money. Okay. So now we're talking about in the money. So this is what happens when you go in the money. So you can see here that the market went down, and in this case here, now we have a $6.10 position, which is pretty ugly. Okay, and so what can you do if you keep the same strikes, right? Basically, you're going to get out with a debit, so you're not going to be able to get out with a credit anymore. Okay, when you go way in the money. And here again, same strikes next day. Same strikes next day. You get, and these are the same width, right? Yeah, the same width. You'll get a $3.30 debit here. Okay, and this is just by leaving it alone. So you're way in the money here, right? And now you got to get out of your hole there. Okay, so in the money credit spreads is very expensive to roll down, and that's the truth, right? Okay, now here, a trade that's rolled down and widened, we have, so zero here, right? We get basically a zero credit, so it's break even, and that's what you would get by widening and next day. And just to let you know, I've done all of these everywhere you can think of. Okay, and so so I have a lot of experience with trading these in the money positions here. Okay, so in the money credit spread will only yield 15 cents of the down, with the downside protection there. Okay, all right, and that's widened next day. All right, out of the money, lowering the strikes 1 week out this time. Now we're gonna send it out 1 week out. So if we keep the strikes in, right? These are the strikes. Yeah. So actually these are, these are rolled down. So we lower the strikes 1 week out, and you'll get a 10-cent credit on it. Okay. And so what do you get on this? Rolling 1 week out gives you distance, and the other part of this is that you can put a counter trend, right? So this is a put, so you put a call spread on it, and then you can actually finance, the roll, and you can pick up additional premium, with doing this. And so it's more to manage, but I can tell you it works. It works when you put a counter trade on and and finance those positions. Okay, out of the money, roll down, widen 1 week. So this time you rolled it down, 15 cent. Rolling it down can also work for additional distance as well, 1 week out. Okay. What else do we have? 70 TE. Okay, so 70 TE. Let's talk about that. So enter with small positions, 10 wide, with those spreads. Entry should be done with relative volatility, right? So if you look at the VIX quite a bit, okay, which I do, I know where that breaking point is, where we get those positions, except when the market goes down a lot, and then you just have to wait it out. You just have to wait it out. So when you get a pullback here, you want to enter those positions, those bull spreads, and that's really the right time to do it. I use a delta of 10, 12 typically, and a little bit less for the bear spreads, and I like to get a premium between 70 and 90, and usually I go a little higher than that too. Okay. Exit on these, acceptable, 50 to 80% of the credit received. You still get a profit on it. For the positions you have been rolled and adjusted, the target should be 20 to 50% of the credit. Now you're not gonna be able to maintain 10 to 12. Okay. Usually you'll get up to about 20 or 25 when you're rolling out those trades, because you have to get it further from the money. And then adjustment on the roll, you want to initiate that 40 points or more when you have a threatened strike. And I can tell you, the 40 cents, 50 cents works really well. And you just have to push it out, and you'll still get a credit when you do that. Okay. So, but anytime that you get less than 40 in there, you'll start getting, it's not easy to manage, after that. And typically once the position rolls down and you have you're actually managing an IC, what happens is the premium on the counter trade, goes down a lot, so you can close that out and then roll it out and then put on a call spread again. And that's typically what I do. You can use a stop loss as well. I've done that before, especially in a market that's just moving up and up and up and up and up and up, and it kills you, right? So, I've done that, a few times, and just close the trade and move on, Okay. All right. So 70 T position here. This is a bull spread and a call spread. Let's see here. And legging that out, you have a 70 T iron condor, the 300 point range is pretty nice. Okay, when you're able to do that, and this is probably a higher volatility trade here because it's 300 points, and so that's what I like to put on these trades, and it typically works really, really well. Okay. All right. So hopefully you've gotten some value of this. out of this. I mentioned before that I do have a trade alert service, and we help guys do this all the time. Okay, and the question is, would you like to follow our trades while you're learning to use short-term strategies that I've basically shared with you today? Okay, and you can go into an environment that everybody's doing this. Okay, that's doing it. They have experience, and actually go to different guys, in our group, and we hone in on things that work really, really well. Okay, and these guys, that trade with us as well. These guys are trade for a living. I mean, this is what they do, and they're just, the experience, is just amazing. Okay. And so if you really want to be in that, in there, I mean, why not, right? This is, this works. Okay. It just really works. So we talked about being interested in learning new strategies, desire to see your account grow, find the right strategy that provides the consistent results. Guys, it just works. Okay. So the question is, is it time to break the barriers, and there has to be a time that you have to get out of this, losing and gaining and losing and gaining. You want to be consistent. Okay. So if you're, if you keep doing what you're doing and hope that something sticks, it's just not going to work. It's just not going to work. And at one point you're going to finally take the steps, that really, really works, and you'll be consistent, and this is where every trader wants to be in. Okay. And obviously, you got to have a no quit attitude, commitment, discipline, having an edge. And I can tell you, guys that come into the service and they come in, they make one loss and boom, they're gone. This is it's not a time to make it rich, really quick. It's you get in there and you fight the fight, and you become an expert in what you're doing, and it works. Okay. And I can tell you it works over time, but you just need to, be fortified and move, and if you take a loss, you take a loss, and then you try it again, and you try it again, and you try it again. This is how it works. Okay. So we have now trade alert service that allows you to to trade, and basically a lot of these trades that come, they actually come from my account. Okay. And so the trade alerts that I put on are coming actually from my account, and that way it's a lot easier to understand, because I'm in the game, right? I'm in it, and I'm, and I know what positions you guys have, and it helps, to do that, and that makes you a much better trader. Okay. So we have two types of discussion. One is having a discussion between people, and we talk, right? And discuss things. And then the other part is having our trade alerts. Okay. And so these trade alerts are very, very clean. There's no ambiguity. The alerts come in, between basically 5 minutes or 5 seconds to 1 minute. And you get that trade immediately. Okay. We have a lot of success stories on this. I'm just going to, go through that. You can, these are guys that really did really, really good, in our service, and honestly, I like to help people, and a lot of guys they come in for 3 or 4 months, and then they leave because they've learned, what to do. And so to me, I see that as a success story. I really do, So now, I've been in this service for almost 6 years now. And, my guarantee is that if you subscribe for 1 month and lose money by following my trades, I'll refund you, $1.25, more than the subscription. But the thing is that this has never happened before. Everybody comes in and they really do start making money. Okay, unless they do things that shouldn't be doing. And all you need to do is just talk to us, and we'll help you all the time. So our service basically. We'll open this up a little bit. Watching here. Okay. So we have 5 tiers. One is free. So we have a Telegram group that's free that you guys can come in, and we post several trades every week and share that. Okay. So our paid tiers are from basically our normal 79, 119, 149, and 219. If you decide to, take a step to join, there's no cost for it. You can join just by, getting an email and you're in. Okay. You'll get $20 off for life. Okay. So instead of the $79, $1.19, you get $59, $99, $129, and $199. Okay. And so what do we have? The monthly is a monthly trade that basically it's just a it's the 3-week monthly trade that we have, and it's really that's the trade that I started with and did really well, and then I expanded to different trades, but a monthly trade is just the greatest way to start with credit spreads. Okay. Then we have the day trader, and then we go into the monthly trade. You have the monthly trade plus subscriber trades and alerts, and then you have 0 DTE, 7 DTE, and then premium trades. Premium trades are trades that Ike trades, and he's in our service. And then we have the full-time trader, which we aggregate futures alerts, right? And ES options on futures as well. So those are for our full-time trader, and actually Ike manages the full-time trader where we have live trades every single day. Okay, from 10 o'clock to 4 o'clock. And then the pro trader, this is our earliest adoption. Michael. Michael has been with us for a while, and he trades naked SPX positions and spreads as well. And he's an amazing trader. He is an amazing trader, and the guys that are with him, it's not $199, but these guys are making big money, in that group. Okay. All right. So real quick, if this is for you, do you want to learn a step-by-step process to gain income in a market that goes up and down? Number 2, do you want to finally break the series of losses and account drains? And number 3, you want to be a consistent trader? This is it, guys. Okay. So what do you get today? $20 off for life if you subscribe, joining our wait list. And the reason that we have a wait list is because, at the beginning, a lot of guys just kind of trickled in, and they really didn't get, there was a lot of questions and you'd have to answer those questions all the time. So what we decided to do is just close the service for newcomers. And then we focus on those traders. And then after that, when we launch again, the traders come in, they get all their answers, all their questions answered, and it's just a great way for people to meld and understand everything that's going on, because guys that are asking questions are getting answered right all the time. And after about 2 weeks, everything comes smooth, and we focus on the traders, and that's really why we do this. All right, trading and education channel that we have as well. Automated signals, as I mentioned before, comes out of my account, and also Ike's account as well. We have trade entry, fill price target after fill. We help you with adjustments as well, and my guarantee that you're going to make money. Okay. All right. So with that, let me go here and let me see what answers you guys have or questions. All right. Can you explain what you do by a stop? Oh, okay. Gotcha. So usually when I put on a trade, a 0 DTE trade, excuse me, the trade, the premium will be 50 cents, right? Let's say it's 50 cents. And so if that trade gets threatened, it'll go to 100, 150. At 150, that's 3x, right? 3x the premium, and then you close the trade. And so that's what it, you know, that's how people look at it for getting stopped out on these positions. But as I told you before, I manage those trades most of the time, instead of closing them. Okay, yeah, I think you got it, guys. Okay, Gordon, let's see, 3x. Okay, I think we talked about that. How to select target, expiration date, short strike when selecting a roll. So when a position gets threatened, okay. Okay, so when a position gets threatened, I take steps to roll that trade. So I usually roll it 7 days out if it's 7 DTE. If it's 0 DTE, I'll roll it. I'll roll it out 1 or 2 days, sometimes more. But it's just my understanding of the market when this happens, right? And when there's higher volatility, things we do things a little bit different. So so we do have I do have a trade plan, and it's free for you guys as well. And let me know if you want that, and we'll send it to you. Okay. What is the capital for Michael's trades? I'd probably say 30 to 40,000 for his trades. Michael might probably say more than that, but those are big trades, and they're making big money as well. Is there someone to chat with about account size? Yeah, I actually have a send me your name is Patel, Himanshu Patel. Yeah, send me an email, and I'll send you the capital requirements that I use for trading. Right. So any other questions, guys, for me? anything at all? Okay. All right. So if you think of something, let me know, and again, I'll help you, with any questions that you guys have, and hopefully this was of value to you. And you do get slides, and email address is al at simpleoptionstrategies.com. That's my email. Al at simpleoptionstrategies. All right, guys. Thanks. Really appreciate your time and an effort to get on here, and hopefully we'll see you in the future and making big money. All right. Take care, and we'll see you on the other side. Thanks.